Good afternoon. This is Brian Split with Allendale here for your closing commentary for the week ending Friday, July 8th, 2011. And we did have a strong market today in the grains led by corn. September settled up 17 and a quarter cents at 6.42 and a quarter. That is up 35 and a half cents on the week. New crop December was up 21 and a half today at 6.37, and that is up 40 and a quarter on the week. As far as soybeans, we did have the August contract up 6 cents at 13.46 and 3/4. That is up 34 on the week. And also up 34 on the week was new crop. November up 8 3/4 today at 13.46 and a half. A little bit of mixed trade here in the wheat, led by Chicago. We did have September Chicago up 16 3/4 cents at 6.51 and a quarter. That's up 39 cents on the week. September Kansas City up 3 1/4 today at 7.27 and a quarter, up 6 1/2 on the week. And we did have September Minneapolis actually down 7 3/4 today at 8.17. That is up 12 1/2 on the week. And so obviously we are seeing some active spread trade between the different wheat markets. At the lower levels of price action here, we are starting to see some increased demand for the abundance of soft red that is in supply right now. And I believe there were stories out today that we're starting to see some of the ethanol plants use wheat as a substitute for corn to reduce price. So that's something we'll keep our eyes out for. But the funds were active buyers today. They bought about 10,000 contracts of corn and 4,000 contracts each of both the beans and wheat. Now, something interesting is the funds have bought soybeans 8 of the past 9 sessions and have been buyers every day in the month of July so far. So with the report that came out on June 30th really not being bearish soybeans and the main focus being on the bearishness of corn at that point, we still do have bullish prospects for the soybean contract at this point. Other than that, we rallied today in corn based off of the extended forecast for some hot and dry weather to come in here in the Midwest. And one of the things that Allendale has really been talking about over the past several weeks is that the yield is the biggest variable in this equation right now for supply and demand. And statistics show that if we do go through pollination with above average temperatures, we should see some kind of erosion in the yield prospects, and that's what this market's going to trade. So no doubt about it, we are in a full swing weather market at this point, and it's going to be very important to see how this market opens Monday morning with how this weather forecast verifies through the weekend. So keep your eyes on that. Other than that, it does appear that the effects of the report last week have made their way through the corn market. Any liquidation that was going to occur has happened. The fund liquidation has run its course, and these guys are back in here buying. So it appears that $6 has shown up as an area of value again. We did have a lot of the end users and export business getting done while we were near that $6 area. A lot of the pass-through buying was also done when this market was below $6. So if we do see further dips based on a lack of heat in the forecast, we still may expect some support to be seen in that $5.85 to $6 area here over the short term. As far as the meat markets today, we had some mixed trade there as well. Cattle was up early, and we did reverse off the highs. A lot of these contracts finishing lower. The volatility was based on a couple things. We did have support from some of the cash bids that we're seeing, 182 to 185 per hundredweight on a dressed basis. But we'd also had the poor unemployment numbers adding pressure to the meats today. So August last trade in the Globex down about 10 points at 114.62. The October down 87 at 120.35. As far as the hog market, had a little bit of mixed trade there as well. The cash hogs providing a little bit of pressure here in conjunction with the jobs data. But we did have the strong corn market supporting some of these deferred contracts for hogs. So that did encourage some spread trade, and we did have a lot of selling of the nearby contracts and some mild support in the back end months here. But August down about 10 points at 96.17. October up about 2 at 89.90. As far as the outside big picture markets, we did have crude oil really fall victim to the numbers this morning as far as the jobs data, settling down $2.47 in the August contract at 96.20. That is after really testing $100 yesterday afternoon. So we're a little overbought in that market. After hitting 100, it's probably reasonable that this market take a little bit of a breather, especially with the disappointing numbers from the jobs. And the market was looking for this increase of 90,000 jobs during the past, and we didn't have that. We also had the unemployment rate jump back up to 9.2%. So besides crude oil, we had the equity markets also feeling some pressure from this data. The Dow currently down about 125 points in the futures, S&P down about 17, NASDAQ down about 25. Now, what did get support from these numbers was the dollar index, currently up about 25 points at about 75.50, and that is well off the lows that we had this morning when these numbers came out. Gold and silver did find some volatile trade as well today. Gold up about $14 at $15.45. Silver up about 5 cents at $36.59, well off of their highs. But one thing that has been a common feature in a lot of these markets in the past several days to the past couple of weeks has been volatility. We've seen the price of corn go from $7.20 down to $6.75, and here we are back up to the $6.40 area. So, being mindful that corn is still in a downtrend over the course of the past month, and that downtrend will likely be tested next week. This downtrend comes in near this 640 to 645 area. We've got the 100-day moving average also at this 638, which was today's high. So we did have a good close today, but it's hard to take anything off the close when we know that these weather forecasts do have the ability to change through the weekend and change everyone's intentions by Monday morning. So please, if you have risk out there and you want to know how to protect it, give us a call. We do expect the volatility to increase, and we've got ideas to help you through these times. So our number here, 1-800-2MARKET, 1-800-262-7538. And also check us out online at www.allendale-inc.com. Thank you, and good luck trading to you next week.